SoFi, please make us rich. Oh, hey, sorry guys, Patrick here, welcome back. In this video, we are going to talk about SoFi. What are some of the updates, the rumors? Do we still like the valuation? And what about that massive price action that we've seen last week? What a reversal, huh? Is it going to continue into next week? Then there's also the shareholder meeting that we have to talk about. So let's get into it, but of course, please like and subscribe. You guys know it really helps. And also, of course, I have to plug it, shameless plug here. If you deposit $500 in your SoFi money account, you do get a $50 bonus. And also it supports me. Plus, if you deposit $1,000 in your investment account with SoFi, you get $50 free. So now let's really get started. Alright friends, if you're looking for a full review of the company, I have it in the description if you missed it. But quick reminder, the reasons that we like the company and think that it's going to be one of the most successful SPACs out there is that they have a lot of different products and their average revenue per user is most likely going to be much higher than their competitors. Here's what I mean by that. So they have a lot of different products, like the SoFi money account that I was telling you guys about in the intro. Then they have the SoFi investment account, right? So this is like a digital wallet. This is like a brokerage. Then they have credit cards, student loan refinancing, personal loans, home loans, insurance. So when you combine all of that, like once you're in their system, for example, I open a money account. It only costs them $50 to acquire me as a client. Well, after that, I open a brokerage account with them, with the investment account. Eventually, if I want to buy another house or refinance, I am going to get a quote from SoFi, and maybe they'll get me as a customer for their home loans. But they won't have to pay more in advertisement to acquire me. So that means that their expenses are going to be lower than their competitors, and their average revenue per user is going to be higher. So their margins are going to be better, meaning that eventually the company is going to be more profitable than some of their competitors. That's why we like it so much. It's that integration of all these services that makes the company very powerful. Then you have Galileo, which is their technology that they bought. They acquired another company, and that is the back end to their system. So they have a payment processing platform, offers the easiest way to create sophisticated payment card programs and digital banking solutions. Well, you have a lot of different companies that are using this. You have SoFi, and I don't know all of them, right? But you have MoneyLion that right now is going public through one of the other SPACs. So the fact that they have the back end and the front end, well, they're getting money in all sorts of different ways, because even when their competitors are going to launch different products, well, if they're using Galileo, in the end, it all goes back to SoFi. So the company has a lot of ways to expand both laterally and also vertically. It's like this one would have been a vertical integration. They bought one of their suppliers, so now they have multiple ways of making revenues. But they're not done yet. They already mentioned they plan on investing heavily into acquisitions and growth. And I really like that. A company that wants to play on the offensive and really try to leverage the cash that they're going to have after the transaction, which is going to be about 2.4 billion, into growing even bigger and faster. So the company that we're buying now is not the same as what it's going to be in 2 years, 3 years, 4 years. They're going to try to expand their suite of products, and I think that they have a lot of different ways to do that. For example, right now, crypto is really hot. It's at its infancy, and I do think that this company is going to make a play in crypto eventually. I know some of you from one of my latest videos are not that excited about it, but I do think that they are going to be able to make a lot of money with that industry. A lot of their different offerings right now are not very well developed. Like the investment account is still very limited. You can buy stocks, you can buy index funds, but you can't really do a lot of things yet. And all of those are things that they plan on expanding in the future. And this is what I like. They're not just going to sit back and hope that they get a little bit of natural growth. They are going to force that growth. So before I get into the valuation and the crazy price action we've seen in the past week, we do need to talk about the shareholder meeting vote, which is going to be a big catalyst for the company, as with all SPACs. So here we finally have some rumors around the date. We don't have a specific date yet, but I'm going to tell you what I found. So the benefit of going with a company associated with Chamath is that even though the guy has a lot of flaws, and right now his reputation is not as good as it was like a month ago. Apparently he lost $2 billion last week. Always remember, if you had a bad week, there's always someone that's had it even worse than you. But anyway, going with Chamath, at least the fact is he has a lot of experience filing with the SEC. So very soon after they announced the merger, they filed their proxy statement. And because of that, the shareholder meeting vote should be fairly soon. All right, so what I found is that on Reddit, someone posted this. We don't know if it's true or not, but it seems true that SoFi sent out this letter to their wealth management clients saying that they're expecting the transaction should close on or about April 9th, 2021. So this would be about 1 month from when I'm filming this, and this would coincide with if they filed on Tuesday, that would be 1 month later. So that is very possible that this week we are going to see an announcement about the shareholder meeting vote, which is one of the reasons that's going to explain potentially some of the price action we've seen in this past week. I have great news. The market tumbled this week. Of course, it really hurt our portfolio. As a shareholder in this company, I looked at my portfolio and it was very cringy in the past week. But the valuation right now is at 13.4 billion. It is much more attractive and enticing than it was before a few weeks ago. So if you didn't have a position before, now is a better time to open one. And if, like me, you wanted to add to your position, well, I added more shares in the past week, so it lowered my cost basis. And there's still a little bit of time. Personally, I would look to do so like before they announce the shareholder meeting. That's potentially one of the reasons why the share price is going to be going up over the next week. But remember, like 13.4 billion, even though it's expensive, you have to remember that this is expected to be a growth beast. 43% compounding between 2020 and 2025 puts it as one of the best in the fintech industry. Because that's not a small company, right? We're not talking about a company going from 1 million revenue to 2 million. That's 100%, but it doesn't mean a lot. And we're talking about a company that's expected to do 980 million in revenues this year. So if you compare it like with some giants in the industry like Facebook, for example, that is supposed to have 25% year-over-year growth. Well, of course, we know that Facebook is in a different league than SoFi, but the fact that this company is expected to grow faster is what makes it attractive. If they only projected 10% growth, then why would we ever invest in this company at this valuation, right? So that's why I'm willing to take the risk, because they expect to grow their revenues much faster than some of the more established companies. So if we look at their actual net revenue for the next few years, well, in 2021, they do expect to lose 238 million. So that is, of course, negative. Like, that's exactly what we're talking about. Here, you're going with a company that's a little bit more speculative than if you go with a company in the S&P 500, right? So there is a trade-off there. But next year, they should about break even, and then by 2025, they should make 635 million. Is that understated or overstated? We don't know quite yet. They're going to have a lot of money to acquire other companies and force that growth. I mean, you see their advertisements on TV all the time. The company is very, very heavily marketing the company to actually acquire new clients. So in my opinion, they're going to do very well, but we won't know until a couple of years from now if they can actually succeed on their projections. All right, guys, let's wrap this up by looking at some charts. So this is the daily interval chart. You can clearly see that the company has been in a downtrend for quite a while now, since the beginning of February. So look at MACD here. It crossed in early February, and since then it has been going down every day. Now, people ask me all the time, Patrick, how do you know if it's time to sell, if it's time to buy, if we're at the top, at the bottom? And these are the indicators that I'm using. I mean, it doesn't lie, right? Look at it. It really tells you, hey, this stock is going down right now. There's more sellers than buyers. And what's happened? It's going down. So I have a video called How to Buy Low and Sell High using RSI and MACD indicators. Link is probably in the description, or look for it. You're probably going to really enjoy it if you want to bring your investing to the next level and really improve your entries and exits in your positions. But with that said, right, look at it. Even though we had that big spike in price on Friday, where it went up 1.66 for 10.34%, it is still technically going down in a downtrend. So if we look at the hourly chart, though, that's where you see it's been going down. But Friday, there was that massive spike in price afternoon. I mean, if you guys caught the lows in the 13s, well done. Kudos to you. I am really impressed. that is amazing. I mean, you guys got a really, really good cost basis for those shares. So here you can see that on MACD, it has been crossing. So on the hourly chart, we are on a little uptrend. So it's going to be very difficult to know, like right now, if it's going to continue into next week. I am thinking that with the 1.9 trillion, not billion, trillion in stimulus that was actually passed, it is very possible, with the anticipation that the shareholder meeting is coming soon, with the 1.9 trillion, like it is very likely that we are going to see somewhat of a rebound. Now, there is still going to be a lot of volatility in the market. That's what I talked about in my previous videos. We do need some confirmation, but I mean, all the signs are there that it's very possible that if you buy into this stock right now, you're not going to do a terrible job, right? It's not going to be a terrible time to buy. At least that's what I see it. Remember, I'm not your financial advisor, but I've been buying shares pretty heavily into this company over the past week. I really believe in it. Few more things. Right now, the warrants are at 575. So if you're looking to add to your position, you can go the warrants route. You are going to get a teeny tiny discount of about 50 cents over buying the shares outright. But the disadvantage is that even though you can trade in and out of them, no problem, you're not going to have that same protection than you would with shares, where you have that $10 floor price. You also can't really trade options on your warrants, and you can't exercise them until about 30 days after the merger. So this is a way that you can actually add to your position if you're interested. Just keep in mind that you have less flexibility than you do with shares. But you're also investing less money, right? It kind of gives you an option on the shares without putting in as much money. So that's one of the reasons why I love warrants over options. Now, one last thing though is, look guys, I'm actually famous. I'm on Google now. If you guys remember, I had made a video recently asking wondering if Kramer was going to pump SoFi on the show, and he did talk about them, and he mentioned that they were a good buy at $18. So the reason why this matters is that, in my opinion, it's not a knock on him. I know a lot of you don't like him, but in my opinion, he kind of represents mainstream media and Wall Street, right? So if he likes it at 18, well, other people on Wall Street are going to love it at 18 and are going to invest in SoFi. So that gives us a lot of protection in our investment if our cost basis is reasonable. Like if you're buying at 30, you're not going to have the same protection as you do right now at 17.72. So last thing about that, one thing that I had thought about recently is that the cool thing about SoFi and these type of digital companies is that the difference for them between 3 million users and 30 million users is really like more servers, which is probably on Amazon Web Services, and some more customer service. It is much easier for them to scale than some of these other companies like the EVs that actually need to build factories to build these electric vehicles. So that's one of the reasons why I really love fintech, and I think SoFi is going to do great. So guys, please don't forget to like and subscribe if you enjoy this type of content. I'll see you guys in the next video. Of course, leave me comments. I love answering you guys.